You know, sometimes you feel like you need a crystal ball to really see what's going on. Hey, everybody, Courtney Smith here with our Wall Street winners for April 23rd. Let's get right into the most important part of the. No, let's skip it. All right, listen, lots of things were happening this week. Most of them were bullish, although there were a couple of bearish things. Right here, we've got a picture of the S&P, and you can see that we had a bit of a rally here, and then on Thursday and Friday, we kind of sold off. But up at the top, the purple predictor is not selling off as much. In other words, the purple predictor is stronger than the price action. And then what that tells me is that the smart money is using this dip in the market to accumulate larger and larger positions. And that's bullish in the market. Now, over here, this is the kind of one bearish factor that occurred here. In the upper right hand corner, that little red line uh, kind of ticked up a little bit, and that shows that selling pressure increased in the market, and the green line shows that buying pressure declined, although just a little bit. Both of them only moved a little bit, but the net result is that selling pressure is increasing, and it still remains higher than buying pressure. So what we're really seeing is the smart money is buying and the dumb money must be selling. So when we combine the purple predictor with the DI plus and DI minus indicators, we get a clearer picture. It's almost as if we had a crystal ball. Okay, Nasdaq, look at that purple predictor. Extremely strong, went up to the old highs that we made back in March. So that's very strong price action. Purple predictor action, but the price action's not really following. But when I look at this is that I say, well, it's going to be very hard for this market to go down with so much smart money buying. Now, seasonality, we had the little spike a couple of weeks ago down, but once again, we're on a buy signal right now. It's a weak buy signal. I'd like to see us make higher highs, but nonetheless, we're on a bullish signal. Purple predictor helping us out here as well. And normally, what we would expect is the market to peak out here right this week, really late April, and to drift lower through the year. That certainly seems like a reasonable expectation of what's going to happen. The yield curve is still capping prices. The yield curve is now finally getting a lot of publicity. I'm seeing a lot of articles about it because it's quite flat, but it's not flat enough to really cause a bear market. You can see in the lower right hand corner, we're down around 115. To be a flat yield curve, we probably need to be down at plus 20, plus 25, plus 15, somewhere in that area. And at that point, I would become very bearish on the market. But we're not there now. And in fact, we're seeing the yield curve widen out a little bit. Now, this one was an interesting one. Asset allocation came back in a rush out of the bond market and into the stock market, and that's one reason why we rallied. Now, over on the far right hand side, now remember this is 1 day late information, but you can see finally the asset allocation faded a little bit there at the end of the week. Now, the stock market risk indicator was another big move this week, and you can see that the market is ready to take on more risk. In fact, we broke to new highs on this indicator, thus suggesting that people are getting much friskier than they were before. They don't want to hide out in things like consumer staples and utility stocks. No, what they want is they want to go back into technology and higher risk sectors, maybe internet stocks, things like that. Global shares, boring. Now, this was another big move. The bonds cracked. Now, we talked yesterday about how they were in kind of a trading range. Over the coming weeks and months, I'm going to reveal to you why I believe that bonds will be in one of the greatest bear markets. That's right, one of the greatest bear markets in history. This may be the beginning, and this is a great opportunity to go short bonds using that gap. This is going to be a big, big, big theme here on Wall Street Winners, being short bonds. Now, the key factors for the bonds, 2 out of 3 are pointing for higher interest rates. 10-year treasuries from Germany the CRB are both pointing for higher prices, higher yields, I should say. The gold is, I'm still going to count that as neutral. Now, the dollar is also still very, very neutral, but what's developed is really two different patterns. Last week, I showed you the purple lines, which is a gigantic rectangle formation, which is boring, and really we have to wait for it to break out of that pattern before we should do anything. Otherwise, it's going to be very, very difficult to make money in the dollar. So let's wait for the breakout. But you can see what's started to develop inside is a triangle formation of where we're bumping up against the top. Now, normally triangles are not bottoming formations. Normally they're broken in the direction of the trend, which would be down. But here we are. We're still in, I think the rectangle is the most important factor. So to me, I don't really want to trade the dollar. Gold, similar situation, but here where we've got the big rectangle, but here we've got more of an upward slanting inside pattern. Gold, now this was kind of interesting. The top indicator is really neutral. The middle one is bullish for gold, but the bottom one is bearish. So pretty much a neutral picture. Oil prices continue to move higher. As I said, I'm a mild bull here. Not bullish enough that I want to trade it, just enough to say, let's look for it to grind higher. I think it's going to be hard, though, up here in the high 60s to really move much higher. Bitcoin broke out as we talked about. All right, that's it for me this week for all you freebies. Love having you here. All right, fully paid up members, just hang on just a minute.